The Nasdaq just posted its largest single-day gain in nearly a year. This record reversal signals a sharp shift in sentiment, breaking through the geopolitical gloom that defined the start of the week. Nana identifies the primary catalyst for today's reversal as a de-escalation signal from Iranian President Pezeshkian. His indicated willingness to end hostilities provided a sentiment floor, stabilizing the market after a period of intense geopolitical tension. While this news provided the psychological footing, it effectively set the stage for the mechanical fuel that drove the rally. While sentiment established the floor, the real acceleration came from a mechanical trigger. Nana notes that once the S&P 500 cleared the JPM collar strike at 64.75, it forced market makers to rapidly cover their positions. This squeeze provided the fuel to push the index past 6,500 in the afternoon. For the second quarter, Nana identifies a broad new trading range, defined by an institutional floor at 61.50 and a ceiling at 68.40. While the equity market rallied, new economic data showed the U.S. labor market is cooling significantly. 42 Macro reports that the February JOLTS data confirms the private sector hiring rate has hit its lowest level since June 2009. This 17-year low indicates that labor demand is contracting faster than supply. Investors are reading this weakness as a positive sign for future interest rate cuts, reinforcing the bad news is good news narrative. 42 Macro views this contraction as a lead indicator for a broader economic slowdown. They warn that a drop in hiring is often the first domino to fall before a more significant break in total employment numbers. While today's market was dominated by aggressive buying, this trend highlights a fundamental fragility that contrasts with the tactical rally. Beneath the surface of today's rally, options play is flagging a significant systemic threat in the private credit market. They're warning of a $3 trillion doom loop as default rates head toward a 15 to 20% crisis range. This shift could trigger between $300 and $450 billion in losses across the shadow banking sector. Unlike past cycles, options play argues a traditional Fed rescue is unlikely this time, leaving the sector vulnerable as high-cost debt begins to reset. The core of the problem is a projected Fed lockout until at least late 2027. Options play points to persistent stagflation and rising energy costs as the main hurdles preventing a traditional rescue cut. This timeline creates a dangerous refinancing gap for companies that built their business models on cheap credit. As that low-cost debt expires, the lack of a policy pivot increases the risk of insolvency, a fundamental breakdown that today's short squeeze simply ignores. The focus in tech is moving from AI software hype to the high price of building physical infrastructure. Unrivaled Investing reports that Meta and Amazon are significantly raising their capital expenditure projections for 2026. Meta now expects its spending to reach between $115 and $135 billion. Meanwhile, Amazon is targeting $200 billion in total Capex to build out its cloud and AI capacity. This aggressive expansion signals a pivot into a far more capital-intensive reality. Unrivaled Investing suggests this step change in spending will create significant free cash flow headwinds in the near term. The competitive battle is no longer just about code. It's about which company can leverage massive physical scale to dominate the next generation of computing. Turning to our signal sweep, energy benchmarks are breaking out. WTI crude recently settled above $100 a barrel for the first time this cycle. Eurodollar University notes the move comes as the global market faces a daily shortfall of 11 million barrels. In individual names, Daniel Prunk highlights Meta as fundamentally undervalued. Even with its massive infrastructure spending, the stock is currently trading at just over 12 times operating cash flow. Moving into the supply chain, Nana reports that NVIDIA is partnering with Marvell on a $2 billion silicon photonics project. This research is targeted at clearing future scaling bottlenecks in AI infrastructure. However, the edge isn't just in the hardware. SMB Capital suggests that a sustainable advantage now comes from operational efficiency, using tools like Claude to optimize workflows, rather than relying on traditional market predictions. Moving into April, institutional levels will define the trading environment. Nana frames the JPM Q2 range between 6,150 and 6,840 as the primary map for price action. At the same time, earnings growth acts as the critical catalyst for further upside. Sunny from the UC2 channel reports that the market is targeting 13% annual growth for the S&P 500, while Mag7 earnings growth is expected to reach 19 to 25%. Our watch list for the coming week leads with energy technicals following the $100 breakout in crude. Today's record reversal shows how mechanical dominance can quickly reshape the market landscape. While the rally was historic, the structural signals in labor and credit suggest a more complex path ahead. Our priority remains signal over noise as these trends develop. You can find the full list of citations in the description. Subscribe for our next update tomorrow.